Hey, it's Marcel with Guaranteed Rate, and I know that most of you have probably started hearing about some craziness going on in the mortgage industry in regard to FHA loans, VA loans, USDA loans, and government-backed securitized loans. And I wanted to kind of just boil it down for you to put it in a format that's a little bit easier to understand as to what's happening, why it's happening, why some mortgage companies are actually changing their minimum requirements. Some mortgage companies I've heard right now are increasing their minimum credit score to a 620, 640, 660, 680. I've actually heard of some mortgage companies that quit doing government-backed loans altogether. So I wanted to kind of just explain that to you in a way that's easy to understand. So what I'd like to do is just show you this graph. In essence, this is really the life of a mortgage and kind of what happens in some very, very simplified terms. So generally, mortgages are going to be originated by mortgage companies. So these are the companies that end up putting the mortgage together, making sure that they fit the lender and investor guidelines. And then once a mortgage is originated, it would end up typically going out to the mortgage servicer. The mortgage servicer then in return pays that mortgage company for the servicing rights, and then every single month as payments are made, in essence, it will end up paying a little bit of money back to this mortgage originating company. So this is an environment where everything is typically going pretty smoothly. Now you have three different types of buyers that are out there. Generally, it's going to be a conventional buyer, an FHA buyer, and a VA buyer. So with this, every single month when these buyers are receiving their money from work, they pay that mortgage servicer, which in turn is going to keep a little bit of their fee and then take that money and send it over to the originating company. And so the mortgage servicer, in essence, is kind of the intermediary, so to speak. And so the differences between these are in FHA loans and VA loans, regardless if that payment is made by the buyer, then that mortgage servicer still has to pay out that principal and interest to the mortgage originating company. And so that's why mortgage originating companies really like FHA and VA loans, because there's a lot more security in originating these types of mortgages, because they're going to get paid even if this conventional buyer, FHA buyer, and VA buyer doesn't end up making the payment. So what we have going on right now is in order for these people to make their payments, they have to go to work. Right now, you have a lot of people who are either unable to go to work, or they are in a position to where their companies have laid them off, shut down, they're no longer in business. So right now, you have stoppages in the flow of money from this work to the conventional buyer, FHA, and VA buyer. So if you're looking at it right now, if there is a loan which is a conventional loan, that money goes to the mortgage servicer. If that payment isn't made, then that mortgage servicer is generally going to be semi-okay because they're still not obligated to pay out that money. However, with FHA and VA, even if that money is not paid, then the mortgage servicer still has to pay that money to the mortgage originating companies. So you can see the mortgage servicer now is really in trouble because they're not receiving that money in, and they still have to pay that money out. So what's happening right now is the mortgage servicers are saying, hang on, we're not really in the interest of servicing loans that potentially are going to be in a very dire position if these workers are not getting paid. So right now there's not an interest by mortgage servicers to take over these loans. So the mortgage originating companies are saying, okay, what are we going to do? How are we going to keep originating these types of mortgages? And so what they're trying to do is make safer and safer mortgages. In essence, they are now putting additional restrictions on FHA and VA loans to kind of make sure that these mortgage payments are going to be made. What are some of those restrictions? Some companies are basically going to go to increasing the credit score. So again, I've heard a lot of companies out there that have increased the credit score requirements to a 640, 660, 680. Some companies are adding additional overlays or guidelines that buyers have to have whenever they're closing on their property to where they have some additional money in the bank. It's technically called reserves. What these mortgage companies are saying is that if you close on your home and all you have left in your account amount is $8, that means there's a higher probability you're not going to have money in order to make those mortgage payments should anything happen. And so what mortgage companies are trying to do to protect themselves and to protect the mortgage servicer is to make sure that people have reserve accounts. So in essence, depending on credit score, some companies are requiring 2 months reserves, 4 months reserves, 6 months, 12 months worth of reserves. So if your monthly payment is, let's say, $1,000 and the criteria is to have 6 months of reserves, in essence, after closing, the mortgage originating company wants you to then have $6,000 or 6 payments in reserves, depending on credit score, of course. So right now, what mortgage companies are doing, and that's why you've seen so much volatility on interest rates, especially on the government side, is that right now everyone's trying to reassess this current market that we're in, where potentially there are going to be layoffs, there are going to be unemployment claims, and thus that's being transferred over. And so right now, if you are interested in doing an FHA or VA mortgage, talk to your mortgage loan officer. See exactly what the criteria are and what the rules are, because there's a good likelihood that they will have changed since just last week. In any case, I'm Marcel with Guaranteed Rate. Please give me a call with any questions. Best number is 972-672-3246, and I hope you have a great day. Thanks.